Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news both China and the US are delivering shaky economic data. In China, August data for both industrial production and retail sales show growth slowing fast. The trade war won't be helping, but in the end, as we've shown before, trade is only a small part of the Chinese economy. This slowing is more about its own structural problems and Beijing's policies towards them. They know they need to reform and open up, but they aren't doing it fast enough to prevent a slowing of the whole economic engine. The bagged data has spurred another wave of hope for new stimulus policies from Beijing, which of course just delays the reform they need. So far, the government seems to be holding the line against any major efforts, but as one respected observer noted, it is going to be increasingly difficult politically to stay the course. The central bank interest rate cut is now expected soon. Weakening data continues in the US as well. The latest regional Fed survey, this one from New York, shows the same trend. And in the US, there is no suggestion of reform or opening up. There, the policies are revert to the past and isolationism. All eyes are now on the US Fed and their Thursday review. Markets are betting a modest 25 basis points rate cut. In Canada, existing home sales rose 5% in August from a year before, but they've been on a steady downward trend since May. Global trade is slowing, as we've been reporting for months now. Till now, essentially it's been a slowing of the goods trade. Now we're seeing signs the global services sector is slowing as well, and it's a broad loss of momentum across many service sector categories. The US Treasury 10-year yield fell back on the shift to safety, down 6 basis points and now at 1.84%. Gold is higher today, up $13 to $1,499 an ounce, but that's a fairly modest reaction to the oil tension news. US oil prices jumped $8 on those tensions and are now at just under $63 a barrel. That's a 15% jump and far less than the doubling that was part of earlier speculation. The Brent benchmark is now just under $69 a barrel. The Kiwi dollar opens weaker again today, now down to 63.4 US cents, while the cross rates were softer too at 92.5 Australian cents, and against the euro we're holding at 57.7 euro cents. That puts the trade-weighted index down to 68.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.